In 1988, a little-known hedge fund named Medallion launched, founded by mathematician Jim Simons along with his company Renaissance Technologies. Simons oversaw the development of an algorithmic, data-driven investing strategy over the following 3 decades that appeared to be able to foresee the unexpected and reveal market trends. In 2018, his stealth fund amassed about $400 million from a $100 original investment, surpassing even the returns of renowned investors such as Warren Buffett. So how has this fund managed to smoke practically every other investor for over 30 years by achieving returns that should not even be possible? I share Medallion's enigmatic magic formula with you through in-depth research, along with the reasons you probably won't be able to profit from this investment goldmine. Let's start by recognizing how incredibly superior Medallion's returns have been when compared to all other ways to invest your money. With access to some of the greatest financial data and business brains on the planet, Medallion has completely destroyed investing legends that are managing hundreds of billions of dollars. Thanks to Warren Buffett's genius, a $1 investment in Berkshire in 1988 would now be worth about $152. This is a pretty decent return, but by 2018, Medallion had made nearly $4,000 out of that same dollar. Medallion has surpassed the returns of Buffett by almost 263 times because to its special sauce. It goes beyond achieving maximal growth. For 30 years in a row, Medallion has produced positive returns every year, something that most people would consider impossible. Even when markets crashed over 40% during the dot-com bust and 2008 financial crisis, Medallion kept humming along, putting up 51% and 152% returns those years. Absolutely amazing. Jim Simons was never quite like the others. A math prodigy with a PhD from Berkeley, he first used his expertise in pattern recognition and produced revolutionary breakthroughs in geometry theory. In 1982, he founded Renaissance Technologies and started hiring people with expertise in number theory, physics, computational science, and statistics. Large datasets that most people were unaware even existed were searched for patterns that would indicate changes in the market. It was cutting edge, unproven, and secretive. 6 years later, the Medallion Fund was established, structuring trades with the use of intricate mathematical algorithms. From there, the secrecy further deepened. Renaissance staff members are still unable to enter several of the floors where Medallion's crew is located. But why does Medallion's strategy work so astonishingly well? When academic theory states that markets are efficient and already account for all known information that could predict prices, because Medallion appears to have discovered inefficiencies related to connections between assets that are only detectable by highly developed computing. Take the following quote from Simons about spotting trends in commodities futures. Commodities used to trend. If you could get the trend right, you'd bet on the trend, and you'd make money more often than you wouldn't. Medallion also uses leverage to optimize profits. Renaissance has some of the most powerful computers in the world, which enable them to leverage 20 to 50 times the amount they actually have in liquidity. According to Simons, determining how much money not to invest is a major obstacle in order to prevent trading too much and influencing prices by themselves. Renaissance has over 100 PhD scientists working with them, as well as scientists from IBM, MIT, Harvard, and other universities. All of them are working to continuously improve predictive signals. Workers speak of a demanding, creative atmosphere that encourages creativity. Their forecasts, produced by combining precise position sizing with state-of-the-art data processing, are remarkably accurate. According to insiders, Medallion employs unusual strategies to keep their algorithms competitive. They most likely trade millions of times each year across assets ranging from equities to currencies, utilizing automated programs. Leverage of up to 50x is purportedly used to boost the results earned by their predictive models. Medallion also structures proprietary fee agreements with prime brokers to execute their high-volume strategy cheaply. They even limit external investments to prevent tipping off other huge funds about their ideas. In summary, Medallion's multi-billion-dollar success likely stems from the following points: massive computing power and data sets detecting obscure, predictive market patterns. Algorithms structured by math and science geniuses to create forecasts. Positioned sizing for the biggest possible advantage without influencing prices. Margin leverage to juice slight edge probabilities into market-beating returns. And custom cost structures to enable high-volume trading profitably. Medallion is a prime illustration of how Wall Street trading has not been completely open and transparent. Medallion maintains a significant advantage over other investors by closely guarding the tactics that enable its algorithms, which has resulted in the best investment return in history. Not even Berkshire Hathaway's Buffett can equal their numbers. But strangely, Medallion demonstrates that markets are not as efficient as academic theory suggests. Their consistent outperformance demonstrates that inefficiencies exist and can be exploited by those who are clever enough to find them. However, disclosing those flaws destroys its predictive power. The bad news is, the fund only manages employee and founder capital, now totaling near $10 billion today compared to the $35 million Simon started with decades ago. Normal investors don't have the possibility to invest, as of now. Thanks for watching. If you liked the video, please consider leaving a like to help the channel. If you want to see more of stories like this, subscribe. Cheers.